This is Barry Zalma speaking for Claim School Incorporated, presenting another true crime of insurance fraud video. This one, number 44, is entitled, "This Isn't Fraud, I'm Just Getting a Lower Premium." Insurance fraud is not limited to fake claims. Most people don't present claims. The basic principle upon which insurance is based requires that the many pay small amounts so that the few who suffer a loss can collect. If the risk is not spread fairly among the many, all suffer. Most businessmen would be shocked at a suggestion that they inflate a claim. They are honest in their business dealings. They honor their contracts and pay their bills. They seldom have insurance claims. And when they have a claim, they deal fairly and honorably with their insurer. Paying insurance premiums, on the other hand, hurts. The marketplace is competitive. Prices vary from insurer to insurer. Skills vary from insurance broker to insurance broker. Eventually, businessmen learn how insurers set their premiums. They know that rates are applied to modifiers like the square footage of the structure, the payroll, or the gross receipts of the business. A businessman sitting with his insurance broker asks how he can get the lowest premium. He will often put his morality on hold when the broker suggests that he estimate a lower amount of gross earnings. The businessman will see nothing wrong with lopping 10,000 square feet off his 50,000 square foot warehouse when applying for insurance. When called upon to list the payroll for his workers' compensation policy, he will be unconcerned when he tells his broker that the payroll is $200,000 less than it actually is. It is just good business sense to reduce your workers' compensation premium. When his policy shows factory workers cost more to insure than clerical, he accidentally reports to his workers' compensation insurer that 10% of his employees are factory workers and 90% are clerical, although the opposite is true. What the businessman does not know, and what his broker does not tell him, is that knowingly misrepresenting a material fact, and there is nothing more material to an insurer than the basis upon which the premiums are calculated, is fraud. Insurance fraud in the acquisition of insurance bears both civil and criminal penalties. An insurance broker who aids or abets an insured in obtaining lower premium based upon false information is equally guilty of fraud. The agent or broker who does not require the insured to sign an application will find, if the fraud is discovered, that the insured will deny knowledge of the application. He will merely say, "I trusted my broker. My records were obvious in my office. All he had to do was ask, and I would have told him the truth." The broker faced with such a situation will find himself defending lawsuits brought by the insured and the insurer. The California Insurance Code, for example, requires the following warning on all claims documents presented to insureds by insurers, as well as on all applications. For your protection, California law requires the following to appear on this form. Any person who knowingly presents false or fraudulent claim for the payment of a loss is guilty of a crime and may be subject to fines and confinement in state prison. I believe, to protect the insured, the broker, and the insurer, that the law should be modified to require the same warning on every application for insurance. Standard applications contain multiple warnings like this one, and it would be useful to have it on all policy applications. A warning will not stop a person intent on committing fraud. It will, however, remind the honest businessman tempted to commit fraud to obtain a lower premium of the hazards of his actions. The ACORD form of application, a standard used by most American insurers, contains the following warning. Quote, any person who knowingly and with intent to defraud any insurance company or other person files an application for insurance or statement of claim containing any materially false statement or information, or conceals for the purpose of misleading information concerning any fact material thereto, commits a fraudulent insurance act, which is a crime, and subjects the person to criminal and civil penalties. This is a New York warning. Almost no one reads the warning on the application. Prudent insurance agents and brokers should point the warning out to the prospective insured before the application is signed to make certain that the warning was read and understood. The fact should be noted in the agent or broker's log so that there is no question in a future dispute as to what the agent said or broker said to the insured and what the insured knew. Every claims adjuster and investigator and every SIU investigator should review every word on the application and obtain the insured's answers asked as if the adjuster had no knowledge of the answers on the application form, or be criticized for not completing a thorough investigation. Because, of course, a false statement on an application for insurance is grounds to declare a policy void and or to rescind a policy so that it never existed in the eyes of the law. This video was adapted from my book, Insurance Fraud Costs Everyone, which is available as both a Kindle book and a paperback from Amazon.com, and is a supplement to my books, Insurance Fraud, 2nd edition, which provides everything an insurance claims person, insurance investigator, SIU investigator, or insurance lawyer needs to deal with and deter or defeat insurance fraud. It is available as both a Kindle book, a paperback, and a hardcover from Amazon.com. Thank you for your attention.